The American shopper squarely in the spotlight, and some very real concerns about the U.S. consumer. Home improvement, clothes, and the other names you all know from the mall, all likely down today. Investors likely fearing the impact of a potential recession on consumer spending. Our senior retail reporter, Courtney Reagan, joining us now with more on the state of the retailers. Court.
Hey, Brian. So consumer discretionary was the hardest hit today, shedding 6%, down 22% this year, second worst sector behind communication services. And if you focus even more narrowly on retail, the XRT down 7% today, 25% this year. The online retail ETF shed 8%. That marks the worst performance since March of 2020. After a strong stretch for the U.S. consumer through an historic global pandemic, worry is now percolating that inflation, not seen in 40 years on necessities like food, energy, and housing is or will hit discretionary spending. So Etsy put up its worst day since November of 2020 after forecasting current macro pressures will hurt business. The CFO said, quote, consumers have less disposable income and many more places to spend it. Sally Beauty shares shed 7%. Its CEO said consumers are, quote, taking a little bit more frugal approach to spending. On its earnings call, Wayfair CEO said while consumer spending is up overall, shoppers are going into the non-discretionary categories are getting hit. But experiences like travel are where the spending is popping, which does line up with Bank of America's credit card data. April spending increased 13% over last year, while airline and travel agency spend grew 60%. Event ticketing agency spending grew 140% over last year. Meantime, Brian, Kroc says its consumer demand remains strong, though, to be fair, shares have lost half their value this year. Mulreat Pennsylvania Real Estate Trust says shopper traffic is up 10% this year through April, with still strong demand from both consumers and tenants. Ryan?
All right, let's dig in a little deeper. Court, stay with us. Let's also bring back in our senior economics reporter, Steve Leisman, because, Steve, I think here's the conundrum. The viewers watching right now, looking at the TV and going, what? Like, the market is down on recession fears, but almost every data point is strong. Airlines are full. The airport's full. The malls are full. Restaurants are full. How much concern is there about what's going to happen, not what has happened?
That's all where the concern is. I think there's a bunch of threads going on right now, and I think Courtney did a really good job of kind of weaving through that. First of all, you have this transition happening. Remember, we were all stuck at home, and we were buying things on the internet like crazy, and the market kind of priced in that to happen forever and didn't remember that one of these days we were going to go back to the mall or back to a concert or get back on a plane. So you have some of these guys coming down, some of these stocks coming down that is part of that natural transition. Put that over here. Now take in the middle what's happening with oil prices. Surging oil prices, what we call in economics inelastic demand, which means in a lot of places we can't really change very much of the amount of gasoline we use. So you put more money towards gas, towards energy, you have less money to spend on other things. That's why the discretionaries got hit. Okay, but what you also have happening is people are earning more money, more people are working, and you have a lot of savings. So you have this period of time here where you have very good numbers, very good job numbers, very good employment numbers, lots of money in people's pockets. That's going to fuel us for a while. And to get to your point, Brian, that is the concern. After some point, this runs out, and perhaps you start to get an increase in unemployment, and that's when the consumer. But most of that concern is a year down the road.
Yeah, looking out, market's obviously a discounting mechanism. I mean, Courtney, go a little deeper into that. Today, everything got wiped out. But recently, some of the discounters, the Dollar Generals, Dollar Trees of the world, they've been doing pretty well. And it makes you wonder how many people are talking in your industry about that trading down effect that you referred to, that just spending a little bit less to pocket that difference.
Yeah, absolutely, Brian. So that is definitely something that we often see when we're talking about times of recession, times of inflation, where you see discounters or the warehouse clubs that also, by the way, offer gasoline at discounted prices. You start to see some of the momentum shift there for retail. I think that's something that's very worthwhile to point out. But you also have names we don't talk about all that often, like Tractor Supply, for instance, which has actually been doing fairly well. They've been able to pass along price increases to their consumers. In some cases, it's not necessarily all discretionary spending if they're buying animal feed for working farms, for example. But then on the flip side of very discretionary spending, look at some of the luxury names, these global luxury names, LVMH, Kering. They've been trading extremely well on very strong sales. But again, to Steve's point, it's all about the warning of what's to come. And it wasn't that long ago that Steve and I were just on the phone together trying to decide exactly about the data and if we were saying the same thing or different things. Because Steve was saying, look, as far as I'm looking at the consumer data, I'm not seeing the weakening. Courtney, are you seeing it? And I said, no, Steve, I'm not seeing it, but I am hearing the worry that it could be coming. Even from a retailer like RH, formerly known as Restoration Hardware, put up a really good quarter, but the CEO couldn't have been more gloom and doom on that earnings call about what it means going down the line for his company and many others selling consumer goods. Yeah,
just go to look at any standby list on any flight that you're on. There's a lot of other people who would like to be on it as well. It's a great debate. And if you guys figure it out, let us know first. Steve and Courtney, thank you very much.